You bought a rental property for $100,000. You had it in an S-Corp. You took some depreciation throughout the years, and then 30 years later you pass away, and your daughter inherits this rental house or this this S-Corp LLC. Well, unfortunately, if she turns around and sells that rental house because she doesn't want to deal with it, well, she's going to have a big capital gain that she's going to have to pay tax on. Whereas if you had your rental house in a disregarded entity LLC, not a corporation, right? Then when your daughter inherits it, it gets a step up in basis to the fair market value. So then when she sells it, there's no gain if she sells it immediately because the fair market value is ultimately her sales price. So we always want to keep appreciating assets such as rental properties inside of LLCs or partnership LLCs, but we do not want them in corporations if at all possible. So when we're talking about the S election and converting an LLC to an S Corp, that needs to be for an operating business, a side gig, something where you're making that self-employed income, not rentals.